Why do $10,000 handbags sell faster when the economy slows? Why do champagne sales sparkle right after headlines turn dark? Luxury should be fragile. Instead, it flexes. Today, we unpack the paradox. Psychology, economics, strategy. And why scarcity might be the most profitable product of all. 1. Crisis paradox, when bad news is good for luxury. Downturns crush mass markets. But luxury often grows stronger, because who buys matters more than how the economy feels. The industry is enormous. Global luxury spending hovered around 1.5 trillion in 2024, near record levels. LVMH reported 84.7 billion in revenue, and Hermès reached 15.2 billion, up 15% at constant exchange rates. So when anxiety rises, luxury doesn't vanish, and it rearranges toward the hands that can still afford certainty. 2. Psychology of scarcity. Why humans buy status in a storm. Luxury begins with emotion, not need. In chaos, people look for anchors, and luxury offers 3. First, status signaling. When insecurity spreads, visible certainty becomes valuable. A timeless bag or a mechanical watch says, "I'm insulated." Second, scarcity comfort. Humans find order in rarity. Sold out reads like validation. In a world of oversupply, engineered undersupply feels like control. Third, emotional control. A luxury purchase is a small victory when the world feels unpredictable. It's a way to say, I can still choose. Economist Thorstein Veblen called it conspicuous consumption a century ago. But modern luxury perfected it, with craft mythology and waiting lists that turn shopping into achievement. Apparently, out of stock now means you deserve it. 3. Strategy: how brands build crisis-proof business models. Luxury resilience is engineered, not accidental. 1. Price before volume. Between 2019 and 2024, over 80% of luxury growth came from higher prices, not higher sales. That's textbook margin defense. 2. Controlled supply. No clearance bins, no fire sales. Production is paced to protect image, not chase units. 3. Portfolio ladders. Mega brands structure their lines like pyramids. Ultra rare icons at the top, core items in the middle, entry points below. When middle-class buyers cut back, they shift to accessories, fragrance, or resale. The brand still captures desire. 4. Distribution control. More owned boutiques, fewer wholesalers. Control the door, control the narrative, control the pricing. 5. Destruction marketing. When mass brands discount to survive, luxury raises prices to create distance. Post-pandemic, Chanel and Dior hiked sharply. Hermès stayed moderate and kept momentum. In luxury, markdowns aren't strategy. They're a myth. 4. Mythology: how stories become balance sheets. Hermès builds scarcity into time itself. Production is deliberately slow. Waiting lists send signals. Not everyone gets in. The result? Resale premiums and steady double-digit growth. Chanel sells narrative and nostalgia. Iconic bags, couture aura, and sharp price hikes, fueling both margin and debate. LVMH operates as an ecosystem: leather, champagne, beauty, fashion. Its diversified portfolio absorbs shocks through scale and story. Myth isn't marketing fluff, it's financial infrastructure. Story builds willingness to pay. Discipline limits willingness to sell. That's how imagination turns into cash flow. 5. Numbers that prove the paradox. Global luxury market, 1.5 trillion 2024. LVMH revenue, 84.7 B. Hermès, 15.2 B plus 15% at constant FX. Just 2% of clients account for about 45% of global luxury sales. More than 80% of growth since 2019 came from pricing power, not volume. Luxury isn't mass. It's concentrated demand with global storytelling. 6 Crisis Lessons 2008, 2020, 2022. 2008. Financial collapse hit everyone, but luxury bounced back first, thanks to tight supply and wealthy resilience. 2020. Lockdowns stopped retail, but digital luxury boomed. Brands leaned on local buyers, online exclusives, and controlled inventory. By 2022, demand roared back, with price hikes leading the charge. Post-2022 inflation. Hermès raised prices carefully and kept loyalty. Others went too far, sparking backlash and softer traffic. The lesson? Raise prices with narrative, not panic. 7. Economics. Why luxury demand looks counter-cyclical. It's not magic, it's math. Wealth concentration. When crises hit, the top 10% retain spending power. Across rich economies, top income earners outspend the bottom by 8-1, and their share keeps rising. Asset effects. Luxury consumption follows the stock market, not unemployment. When markets recover, so do boutiques. Aspirational shifts. Middle-class buyers scale down, not out, toward beauty, small leather goods, or resale. Desire just moves price brackets. The luxury buyer in a crisis is never the average household. 8. Culture. Why luxury feels like identity insurance. For the elite, luxury is continuity. A reminder that their world is still intact. For the upper middle, it's control. A small treat that says, I still choose. For new wealth, it's arrival. Proof of entry into global symbols. And now, quiet luxury is the new loud. Fewer logos, more heritage. Status that whispers because the truly rich prefer understatement when the world screams. 9. The new pipeline. Digital, resale, and finance. Digital luxury builds intimacy through apps and personalized access. Resale opens the door for aspirational buyers and proves long-term value for investors. Some buyers now see luxury goods as assets, not indulgences, stores of value in volatile times. Meanwhile, conglomerates like LVMH act like ETFs for investors, diversified, global, resilient. When finance meets fashion, the handbag becomes a hedge. 10. The risks. What could break the illusion? Push prices too far and the dream cracks. Analysts estimate 50 million luxury consumers dropped out since 2022 as inflation and price fatigue hit. China's slowdown remains a risk. Creative fatigue can dull desirability. And politics around inequality could turn overt luxury into a liability. Pricing power isn't infinite. It depends on storytelling power. 11. The future. What comes after the illusion? Polarization deepens. 2% of clients drive nearly half the market. Quiet luxury spreads. Craft over flash, personalization over scale. Experience becomes product, private shows, atelier invites, exclusive memberships. Margin turns into belonging. The next luxury war won't be about handbags, it'll be about access. Maybe luxury was never about comfort. Maybe it was about survival and style. When the world feels unstable, certainty, stitched in leather or plated in gold, sells peace of mind. The illusion isn't that luxury thrives in crisis. It's that we're surprised every time. Stay curious, stay sharp.